Good morning, everybody. Happy Monday. I hope you are, as I suspect, if you're watching this, uh, getting ready to, as my friend Money or Debt says, approach the current market turmoil with the stoicism required for Bitcoin. Bitcoin is the stoic asset, and though we have crazy market moves, Bitcoin still follows an adoption trend, which should give you confidence and the courage, the courage to purchase more, even during a down trend, especially if you're younger. Look, I mean, if you're younger, you don't have much to lose. You're not worried about your 401k. Discounts like this in the price of Bitcoin are always welcome. For those that rely on their 401k for retirement payments, pension payments, dividends, swings like these can be not as welcome. But we're going to talk about it here. And I also want to do I know the markets are just bloodbaths. We're going to talk about markets, talk about Bitcoin. But I think it's also possible that most days I'm going to say something about the Ukraine war because things are really dangerous right now. They're really tense. And perhaps if you're not following it as closely as me or people that live around here, you might not understand. So, ended up being 9 children that were killed in the town of Kryvyi on Friday. It is, as it says here, it's Zelensky's hometown. All right, one of the deadliest strikes this year in a conflict that shows no sign of a swift end, despite a push for peace by the Trump administration. And just to show you how detached from reality and sad it is to see the United States act the way that they do, I'm going to read this quote from you. Perhaps you saw it. This is from the ambassador, the U.S. ambassador to Ukraine. She wrote this Friday night, horrified that tonight a ballistic missile struck near a playground and restaurant in Kryvyi. All right, more than 50 people injured and 16 killed, including 6 children. She didn't have all of the information at the time. This is why the war must end. Now, she is following the playbook that everyone in the administration is doing. And this happened sometime after the nomination of Tulsi Gabbard for the DNI director of national intelligence, because Tulsi Gabbard was asked point blank by Senator Kelly who started the war in Ukraine. And of course, she said Putin. She said Russia, because that's a fact. And facts get lost in war. But since then, there has been a push. You saw it with some other confirmations. You've seen it at the United Nations, whatever. The United States has taken this view where they need to somehow approach this conflict as a neutral observer, not help Ukraine do everything they can to win. And yes, I know Biden did not do everything that they could to have Ukraine win. And this is the result. Is this just feckless, not helpful quotes that don't recognize the reality? Now, she faced such a backlash that later on, she changed her tune. This is from a couple hours ago. Actually, it's from yesterday. We stand in solidarity with the people of Ukraine on this day of national mourning after a Russian missile attack in Kryvyi killed 20, including 9 children. All right. Purposefully striking a playground. Our deepest condolences to the families and loved ones of all those killed and injured. She at least put the word in Russian, because there are so many that just object to this simply feckless head in the sand posturing that the United States is doing to try to do a deal with someone who will never, never honor a deal. Remember what Lech Walesa said: Russians have one hand on a pen, the other on a grenade. This is not hard to understand, but this is the position that the administration is taking. So it's terrible. I just wanted to show this because, Perhaps you saw it, but this is not going to be the way to end a war. And in fact, obviously, I'm going to talk about the trade stuff again. I've talked about it a lot last week. I think, in order to be somewhat current with these videos, which I'm glad I'm streaming now and not just doing recordings, we're going to have to uh, stream these like every day if I can to try to keep up with the madness. These are extremely dangerous times, these tariffs, what they're doing. Okay, beyond the increase in the price of goods, all the rest, what the U.S. is trying to do is put every single nation in the world on the defensive in something that not only is going to hinder free trade and markets and collaboration, but it is going to embolden autocrats and dictators. And of course, everyone in the US, well, I shouldn't say everyone in the US, plenty of people in the US that came out over this weekend by the millions to protest what is happening know that, but it's not forefront on their mind. To me, what I can say, living in one of these precarious, dangerous zones where if we don't have a strong allied response to aggression, we can't stand up to it. That's just the bottom line of where I live in the Baltics. So it's always going to be top of mind for me, and the economic stuff is very much going to overlay into the war stuff. All right, so I know this is a depressing way to start the video, but I just wanted to show it because it was such a horrendous move over the weekend. You can find pictures of these poor kids that are no longer with their parents. You can find pictures of the parents sitting there with their kids for hours while the emergency response teams came, and it's just horrible. It's absolutely horrible, but this is where we are. Yes, Kevin, does anyone need a kidney? This is basically the response that the Trump administration is setting up. And look, I'm going to try to approach this from a rational way, and I think that there is some rhyme actually to their what seems without reason. They are trying to mostly help themselves, but I think we can talk through it. So here's the markets. I'm going to have to start showing these now because things are changing so quickly. All right, everything is down on the day. The Hang Seng, this just gets worse and worse. It was 12% when I started looking at this. Now down 13% on the day. Hong Kong. Let me this performance now. I'm going to spread this back a month. Okay, so this is basically every major market. All right, the Nifty, that's the Indian markets. That's down. We basically have every single market on the month that is down. 3 months. Slightly different. Oh yeah, okay. So the German market actually was positive. They're now down on the 3 months. Now we just have the Nifty 50 that is positive, but this is a very illiquid market. The is that the Nifty 50? Hold on. No, sorry, that's not the Nifty. That's the Hang Seng. The Hang Seng is the only positive market over 3 months, okay, at 2.84% up. Everything else is negative over 3 months. All right, if we go back a year, oh, sorry, I know it's not showing up in the video as much. Here we go. 1 year. The Hang Seng is still up quite decently, actually, 18%. It was up, over 40% just a couple weeks ago. Now it's up only 18%. The German index is still up, the DAX, but the CAC, the S&P, the Nifty 50, the Nikkei, all of them down big over the course of a year. I have no doubt that there are members of the administration that are aware of what was going to happen to these tariff moves and are profiting from it in some way. But this is the hard part about regulating markets. And I don't think most markets should be regulated the way they are. But if you're going to put in something like blended average of whatever there's going to be after all these increases, 30% tariffs on the entire world, that's pretty big market regulation, which is going to influence things. So this is going to stay low for a while. But I have no doubt that people in the administration are going to try to profit from it, or at least are not worried about it, to say it benignly. Of course, first and foremost, the Commerce Secretary. Okay, so Cantor Fitzgerald, led by Howard Lutnick, has a 5% stake in Tether, valued at up to $600 million. and also manages the custody of Tether's US T-bills, which back the stablecoin. Okay, so Bill Ackman, who has been completely wrong on most Trump policies and is not at all looking for this security of the free world in the Trump administration, he at least recognized this, that if you're going to try to regulate markets, finding those conflicts of interest is very difficult, okay? And people are still, to this day, that we never know, because this is another chart I'm going to show in a second. At the moment, and it can be expected, the dollar is usually the safe haven trade. It's the risk off trade. When things get volatile in the markets, people want to retreat. They want to go back to the castle. The castle is T-bills. So you see the price of T-bills rise, or bonds or notes. There's just different durations there. Bonds are above 10 years. Notes are 10 years. Bills are, 30 days, something like that, or less. All these varied durations. Usually the yield will compress, the price will go up. Okay, that is still happening. It is still happening, and it still shows that there is some strength. The dollar is the best looking horse in the glue factory, but it's not a guarantee. And here's where I want to show you that it's not a guarantee. This is a very slow moving chart. Okay, I've talked about GDP and trade. We'll go back to it in a second. But this is the IMF's estimations, and obviously you can see it just looks ridiculously smooth. It's not going to look this smooth. This is world GDP. They project by 2029 we're going to get up to 138.8 trillion. Right now we are about at 110 trillion. This year projected 115 trillion. You can see that obviously the smooth line is just, it's projections, okay, going out to 2029. The U.S. is going to shrink here, okay? Even with the IMF's projections, the U.S. shrinks, okay? Here it is at 27%, which actually is an increase from 10 years ago, okay? So this shows you that even with the madness of the markets, and that certainly happened during COVID, all the money printing, the dollar remains the strongest asset. The question will be how longer this can go. IMF says no. IMF says it's coming back down. And this is the United States share of global GDP. All right. You can draw a trend line seriously from obviously back from the 1960s and see it's down. But just logically, we know, okay, that the United States, what the United States is doing right now with the tariffs, foregoing the 80-year military alliances that they've had, which they haven't explicitly done it for Europe yet, but I can tell you that obviously us being in the most vulnerable position in Eastern Europe, we're most worried about it. By doing all these things, decoupling from the rest of the world, it just shows that they're trying to conserve something that is not conservable. Doesn't matter how many regressive tariffs you do. When you tax something, you will get less of that thing. The world wants to grow. The world wants to be as rich as the United States. The world wants to grow, and this is what the IMF is just projecting out here. Trump thinks he can change that by taxing the rest of the world, and the question will always remain, and Bitcoin is going to play a part of this, by the way. If and when people give up on the dollar, or at least give up on the dollar on the margin where something like a tariff really will hurt, people are going to say, look, we got a world that's 8 billion people out there. Why would we want to just waste, even though there's a strong purchasing power for 300 million of those people, why would we want to waste our time dealing with these sorts of policies? Then you could see problems, all right? And so here we go. This is obviously a headline that probably most people saw over the weekend. They've already withdrawn a lot in the last 15 years. But Germany's going to want to take more gold. I don't have a chart on this. I need to get one out. But this is the sentence I wanted to read for you. Today, Germany still has some 1,200 tons, or about a third of its gold, stored in the vaults of the New York Federal Reserve in Manhattan, plus another 430 tons with the Bank of England. At current prices, U.S. held gold would be valued at over $100 million. So gold is base money, as I've talked about for years. Base money is the core of the system. Doesn't matter how many paper tickets you print above it, you still have gold to come back to. So even though these numbers seem kind of small, they're actually extremely powerful in the confidence of a system. Okay, so even though you can have, in the United States' case, nearly $40 trillion money supply, and the United States has, a few $100 billion worth of gold in its holdings, monetary base of 5.2 trillion. Those core figures of the base money, they bring stability to the system. Okay, both in fiat and in gold terms. So if you print more fiat, you have the risk of inflation, and if you sell the gold, you have which is what the United States has done basically for the last 50 years. You're always going to have the risk that the market doesn't trust you selling and doesn't want your dollars and could squeeze you there. So that's what the United States is in biggest risk of when it comes to its gold holdings and the dollar. The French did that with the United States in the 60s. De Gaulle, it was his last great act as president. Regardless of which side you stand on the gold debate, I basically forced the United States to get off of the gold standard. Okay, so let's go back to this. Again, this is the GDP components. Talked about this last week. Okay, it all comes down to this. Net exports, which is a very small component of GDP, number 4 here. Negative 900 billion. The most of that is China. But sort of not the surgical scalpel, but just the hack knife axe that was taken to every single country, including countries that just had penguins on them, on their territory and their islands, which were even subsets of Australia or France or whatever, which again is so hilariously wrong. Besant actually tried to walk this back, that he was really involved in the trade. You probably saw this over the weekend. Besant, the Treasury Secretary, tried to walk this back, that he was really involved in the trade discussions. And as is typical with a lot of the goofy things that this administration is promoting, it's just a core group of people, no doubt the Stephen Miller types, that are basically just kind of doing what they want. And in this case, clearly using something like ChatGPT to simply take the trade balance divided by imports and make that seem like that is somehow a tariff. It's not a tariff, all right? If other countries want our dollars, if we can buy more from them, which are cheaper goods, probably at a cheaper price for our inputs, and when I say our, now I'm speaking from the American perspective, then our GDP is going to go up, and as it has, right? Remember, this is the biggest component, number 1. But there's nothing out of whack here. This is what I always try to make the commentary when we talk about markets. Like, a lot of crazy things can happen in the market, but look at this. It's the same ratios the whole time. Okay, yes, there's a trade surplus. All right, let's put the net in. This is above 0. This line is the net exports divided by imports. So if your exports are more than your imports, divide that by total imports, you get a positive percentage. Okay, so it's huge after World War II, 136%, huge amount of exports. But then it starts getting closer and closer to 0 until the 70s. But again, as I talked about last week, you look at these 4 numbers, 1, 2, 3, 4. Personal consumption's always going to be the biggest component of GDP. It's just immediate demand in the next day, week, or month for food, energy, clothing, whatever it is. Your investment is a smaller proportion of that, which is going to be amortized over the long term, both commercial and residential. And then your government component is still, it's still a decent chunk of the economy, of which defense is a huge chunk of this. It's not like I'm looking at the shaded areas here. They're not really changing in dynamics. Yes, it would be great to have government be a lesser share of this number. And yes, inflation harms the end user always, that is printing more than we have. But this is the Triffin dilemma. This is why people want dollars. All right, so the dollars go abroad. This is where you get that negative net exports of goods and services. To now it's to the tune of $900 billion. This is just us buying more from the world than the world buys from us. But it's not. There's no tally of an income statement here. There's nothing you can even run tax off of. All right, so this 22% trade deficit, which actually, even though their formula would show that they divided by two, so it'd be about 11%, the blended, as they're showing, because China was way over the actual figure. If you counted the new tariffs and the old tariffs, the blended seems like it's going to be something even a third higher than this. So it seems like they're trying to get to something like a blended 30% on the tariffs. I got to get a blended tariff rate up there. But really, this 22% trade imbalance, as I've said it 5 times last week, it doesn't mean anything. It just means that the rest of the world wants dollars more than they want our goods. And we want the rest of the world's goods more than we want our dollars. It's the same thing as if you walked into a coffee shop in the morning and you wanted that coffee, you handed over the dollars. You want the coffee more than the dollars. The seller of the coffee wants your dollars more than the coffee. That's trade. It's subjective value. The United States has a privileged position in the world to give its dollars away at cheaper than it otherwise could do because it prints the money. All right? And that's a privileged position for the United States. So let's go back to this one. We can see that there were some big moves here. This was after the Vietnam War, actually. At the end of the 70s, start of the 80s, the U.S. went back up to like 35% of the economy. And then after the Soviet, not directly after the Soviet Union fell, by the 2000s, also went back up to 30% of the economy. My only understanding of how the United States could bring these numbers back to, say, from 25% back up to 30% of the economy again, like these two bumps happened before, would be if the United States has the ability to crash the world economy by tariffing and taxing so much, and still having the purchasing power of the dollar hold. In that case, maybe we can get back up from this, gradual decline, this is the IMF's numbers. All right, they're showing that gradually would decline from 27%, 28% down to 25% by the end of the decade. We'd have to depress other world economies and still have people want our dollars. I don't really see it another way. Or again, this is the dangerous thing I talked about at the beginning. If we go back to a war situation. And, how embarrassing is this going to get for the Trump administration? It's nearly a month now where the Ukrainians agreed to an unconditional ceasefire to continue talks. The Russians haven't agreed to it. And like I said, they don't even want to mention the name Russia when people get killed until they're forced to. So it's very tenuous. This is the trade. When trade imbalances become so great that it can turn into war, that's where I think it's really, really dangerous. All right. So having said all of that, let's go back to Bitcoin. I need to think of a chart that could really show how small in the Venn diagram someone like me is talking about this stuff, because most Bitcoiners, perhaps you watching this, are very anti-government, pro-individual liberty, but more perhaps even than individual liberty, you're anti-government. Core function of government still the military. I don't see that changing under the Trump administration or any other administration in the world. So it's just the world that we live in. But populism is rising. So there is a retrenchment back into national borders, a lot of xenophobia, a lot of, in some cases, very correct, but in some cases, very incorrect tackling of immigration issues. And it's going to, it's going to lead to a lot of polarization. And we already see the war that is happening in Ukraine. Bitcoin is a solution, all right? The best looking horse in the glue factory, all right? If people still want dollars, the dollar might get along. But as we see all across the world, markets are just tumbling no matter the currency. And at some point, like I said last week, that trust will run out in the dollar. Now, regarding Bitcoin, huge drop yesterday. Huge drop. Okay, so we're now at $76,000. Unfortunately, I'm changing my APIs. I do not have that in this chart. I think this is even of 2 days ago. So it's the morning of April 7th. Even 2 days ago. 83,000 is pulled into the model. Okay, so I don't have the dip down into 75, but that's okay. We can just look at the trend lines aren't going to change. Okay, so this is every line. Let's go out to even the end of April. And notice how the trend goes up, by the way. Okay, the trend is increasing at something like 42% per year, more like 43.5% per year at the moment. By the end of this year, it'll be 42% per year, which is an enormous growth. Even though it doesn't seem that much on log scale, this is an enormous growth compared to any other market in the world. Here's 30 April 2025. The trend will get close to 100,000. Okay. Some people have different trend lines. Mine is about that. Some people have trend lines, their power trend still in the 80s. Mine is already in the 90s. And that's just the trend line that I've had since the beginning. Depends on your early day data. Mine started on Bitcoin Pizza Day. Some people start a little bit after. It's an art, not a science. But this is my trend line. These are regressions. Okay, this is not like I drew lines on TradingView. These are mathematical regressions. 99,000 by April 30th. Okay, so let's go to the current price. The current price, as you can see there, and it's hopefully you can see number five, that's the 50th percentile, is $74,000 Bitcoin. And we, in the last day, I think with the dip, hit it. Yeah, we did hit 74,000. Did we hit 73? I don't see that we hit 73,000 in the last 24 hours, but we have hit 74. All right, so we're at the 50th percentile on all the prior price observations based on the trend line growth of 96% R squared. Okay, what does that mean? First of all, notice that the trend itself is between the 60th and the 70th percentile. Okay, so that is kind of like the average. It's not of course the average. It's not the average price, but that's you can think of the mean as the trend in this case. So the main trend, when you run all the pricing data, you run a power regression, you get the 96% R squared. The trend line is like the mean. Okay, so notice the mean is not the 50th percentile. The 50th percentile is if you take all of the observations, you stacked them up, all right, one next to another, and then you took the middle one, the middle observation, the 50th percentile. Okay, so 50% of the observations are going to be below that number. What is that number? $74,000 Bitcoin. One more point regarding these percentiles and means. Mine is run on, and again, my buddies at the Best Bitcoin Data show, Plan C, Cena, these guys, they're usually running percentile quantile analyses, which kind of make their percentiles in the past look very smooth figures. I run mine on the multiple. So the multiple, what the price is any time above or under trend. Okay, so I run it to normalize my data. I'm running on the multiple. So for example, where are we right now? And you can, unfortunately, the tooltip is bad with my 50th percentile is a yellow figure. I've tried to outline it, but hopefully you can see that on the screen. Number 5, the 50th percentile, there's a multiple there. What does it say? It says 0.7x. Okay, so what that is saying is that 50% of the time, the price is going to be zero point 0.7 the trend. What's the trend? It's right there, 99,000. Okay, so I really like these multiples because percentiles are one thing, but if I can give you a multiple, then you kind of know this is mathematically what happens. So mathematically, 50% of the time, the price will be at or below 0.7x of the multiple. The multiple is 99,000 at this point, so there's your 74,000. Okay, so just right there, that's half. Half of the observations will be below that figure. Half will be above. But remember, it's not above price-wise, it's above multiple-wise, okay? So the 60th percentile is 0.9. The regression itself is 1. All right, it's 1. It's the regression. And then the 70th percentile is 1.1x. 80th percentile, 1.4x. 90th percentile, what is that saying? 90% of the observations are going to be below the multiple of 2x. And that's a figure that's not going to change. I can go back and forward. Look, let me try to drill this in. See how the multiples don't change? The price changes, but not the multiples. That's why I like using multiples. So if I go back here, and it's here in the 2013 top, we were actually that's a 100th percentile event. That was one of the tops. I think it kissed it another time in 2011. Yeah, this was basically as well the same thing. So the 100th percentile is a 7.8x over the multiple. Okay, so at the time, and this regression can't work here, but this is why they're sort of windy like this. I could put the evolving regression trend line, but then it gets too many lines and it gets confusing. But point is, at any given time, you have this multiple, it will work. So 7.x over the regression trend line at the time is $1,100 Bitcoin in November 2013. All right. So, and then we can get these bands and we can see where we are. And the beauty of where Bitcoin is right now, especially because we know it's on the uptrend because we're over a year from the halving, and usually the pump or the boom or the interest or young 17-year-olds want to start taking daddy's money to buy Bitcoin. That happens every 4 years, and it happens after the hype of 1 year of mining halving. The beautiful thing is we're right on trend. I mean, not only are we below trend, which again is a buy signal, never financial advice, we're just right in the comfortable 50th, 40th percentile. So let's go out again to the end of, let's take it to like June, give us a little bit more time even. All right, so now the 50th percentile is $78,000 Bitcoin. That's below the current price. Current price is $76,000 Bitcoin as I speak. So you're getting a discount on June's 50th percentile multiple right now. It becomes pretty rare, though, to the downside to be below, current price figures. All right, if you look out 2 months from now. What do I mean by that? Look at the 30th percentile, which is 0.5x, half of the multiple. $53,000 Bitcoin. That means 70% of the observations based on the 96th percentile R-square trend line would be above it by June 2025. Seems pretty cheap. $50,000 Bitcoin seems pretty cheap in June 2025. I'm not saying it can't go there. I'm not saying it couldn't go there for a couple months and stay there. Of course it could. But based on the math, statistically, that's well in the minority. 20% is well in the minority. Again, if you want to think of normal statistical deviations, 1 sigma is roughly between 2 and 8. 2 and 8. Okay, so 2 is the 20th percentile, 8 is the 80th percentile. Subtract those, that means there's 60% of the observations between that. That's something like 1 sigma. It's not exact. 1 sigma assumes a bell curve. This is not a bell curve because in finance we can just look at all the observations. That's why it's better to use percentiles. 60th, the 60th percentile, or the chunk of 60% observations in the middle is something like the 20th and the 80th percentile between those. So that's something like between $46,000 Bitcoin and $145,000 Bitcoin. And again, if you see where the trend line itself should be, $106,000 Bitcoin, we are in sale territory. All right. So if you're young, I remember this very much talking to, financial professionals, traders, when I started to get into the markets, which was a long time ago, even before this chart started. Okay. Back in the early 2000s, the .com boom and bust. It's a blessing for young people to see sales in asset prices, which is why, by the way, I don't think that the Trump administration is just bumbling along into this. I think there is some intent. We saw rumors of that with the strategic Bitcoin reserve. Many leveraged orders on the market seemed to occur on the days before that it was announced. It's very hard to regulate markets, and usually the people that are doing the regulation, you want to be quite skeptical of, okay? Such as this idea. All right? Your fixed income assets are going to go up when the market crashes. And plus, it's good to know when the market crashes, because then if you have your powder dry, you can even buy more. So there could be a method to the madness. But the beautiful thing about being a Bitcoin fan, understanding that there's a safety valve to all this madness, is that we are at a stage. We're not always going to be there, okay? But we are right now in 2025 at a stage of strong adoption of Bitcoin. The slope of the trend, I remember this, the trend, let me take the tooltip off. The trend is the black line, okay, the all-time trend. Okay, you can see the trend was moving faster here in 2011. Sorry, my tooltip is, see how the slope of the curve in 2011, 2012 is very fast. Then it almost goes flat because it went too fast. Then it speeds up again in 2013, then 2017 a little bit. But really from 2017, you see that we're kind of on the same pattern of the rainbow, the same trajectory that happens once we start going into full projection mode. Bitcoin is very predictable. It's very predictable. And it has been since the end of 2016. For those that have been following me for a long time, I'm sorry if I keep repeating things, but this is what it's all about. This is the whole enchilada. Yes, it's also about the growth of the monetary base, the printing press. Worldwide, that's about 25 trillion right now, which, by the way, is down from 30 trillion back here. The monetary base globally was 30 trillion here. Now it's 25 trillion. Bitcoin still went up in price. Yes, it went down. Yes, it went up. But the monetary base is down 5 trillion. Bitcoin is up in price. That shows that what dominates in the formula, what dominates in the calculation is adoption. You have to look at price as adoption, not as someone trying to protect their purchasing power or global liquidity or the global monetary base. It is secondary in my view. And people might disagree with that on the margins, but it's pretty much been my thesis, and I think it's reliable, and I think you should draw comfort. You should draw confidence and courage in these figures if you want to protect your family. So let's go out to the end of the year. Let me go back. Let's go back like here. All right, again, we were above the 90th percentile here in the 2021 double top. First in March for a couple months, actually. Then just barely kissed it in November. And then look at the gap, by the way, between the 90th and the 100th. Okay, I haven't talked about that yet. So obviously, you know, you see how compressed it is around the 50th percentile. Okay, obviously, most of the time in the middle of these ranges, the data will fall. But when you get to the booms, when you get to silly season, which we're coming up to, the lines have to get farther apart to catch each percentile. So notice how between like the 50th and the 60th here, there's only a couple $1,000s in value, in price. But between the 90th and 100th, there's a lot of open space. Okay, so the 92nd percentiles, might be something like the distance between the 50th and the 40th, but then you go to get to 96, you got to go way up here. And this is all based on the multiples. It's based on how that black line moves, how that green shaded area, how the green shaded area moves up or down around the black line over time. So there's, in my opinion, no way by the end of this year we get above 7.8x. Okay, we didn't have that boom during the 2021 boom. We got closer in 2017, but still we didn't hit the 100th percentile. This is probably like 97th percentile. We're not going to get to the 100th again, which happened back in 2011 to 2014. So it's probably going to be somewhere between 90 and 100, because we did hit, I got to show this again, sorry. We did hit the 90th here a little bit. Take the tooltip off. We did hit the 90th percentile here. The 90th percentile was 43,000 at the time in 2021, and the price was 57,000 at the time. So I do see that happening, something like that, probably hitting to the 90th. And the 90th at the end of 2025 is $250,000 Bitcoin. And what is the 90th percentile? 2x the trend. 2x the trend. So 2x the trend, just look at the trend line, multiply by 2. $124,000 Bitcoin, $125,000 Bitcoin is the trend line. It's going to be double that to get to a 90th pop. And I think that pop will probably happen. With this rate, with the tariffs and all the madness and even a lack of global liquidity, which could happen, but not necessarily. Remember, Trump always likes low interest rates, and he's going to push for them if markets continue to go bad. It's possible this could get extended out maybe another 6 months further than we think, than the previous 4-year cycles. 6 months or so. So then if you go out to like June 2027, say that all of a sudden things, get normal again and we spring back, then you're looking at $400,000 Bitcoin as the 90th percentile move. The most important function of Bitcoin right now is adoption. This is my thesis. Okay, the most important function of Bitcoin is adoption. When you see this green shaded area, it's price, yes, but what it is actually showing you is global adoption according to a power curve, which is how networks grow. Okay, cities grow this way according to a power curve. Not the global population, but cities, networks. Bitcoin is a monetary network that is being adopted. But having said that the natural power function of Bitcoin, the power regression of Bitcoin, the natural power curve of Bitcoin, adoption is what dominates. Adoption is what makes it a power curve. I do think that when it comes to the rest of the economy, rest of the world, GDP, military spend, imports, exports, what dominates is actually the government. And remember, this is not total government spending. This only includes direct spending. It does not include transfer payments. Social Security, Medicare, Medicaid. It doesn't include interest on the debt. So I think that, tax rates, tariff rates, money printing, those things will have a big, big impact on what happens here. But most importantly, I think it's war. Russia's in a place where they just cannot stop the war. Their markets are getting slaughtered. This is the same thing that happened in 2008, by the way. Let's look at Hang Seng, S&P. That's total return S&P. This S&P, Hang Seng, and the Moscow, terrible Moscow market. The only economic value of Russia is in Moscow. Okay, so again, Trump is a dealer, as we know. He's going to try to make deals with Putin. He doesn't care about Ukraine at all. He doesn't care about lives in Ukraine, and that's the narrative of the U.S. government at the time. Everybody's suffering here. Russia's suffering even more. This is very good, of course, but Putin is at a place where he's not going to. He can't take the gas off, in my opinion. A soft landing for Putin is very difficult at this point. That's what the Trump administration wants. But if the Trump administration somehow makes a deal with Putin that, okay, we'll stop the war. Again, their terms are so egregious right now. I've talked about this 5,000 times. But, Russia, who has North Korean troops, Iranian drones, Chinese kit, they want Ukraine to not have any foreign help. That's what Russia wants. That's one of their unconditional demands. I guess that's an oxymoron, isn't it? That's one of their most steadfast demands. There will be no unconditional ceasefire without that. That's what they say. Ukraine, of course, is not going to agree to that. Even though Ukraine did agree to an unconditional ceasefire for 30 days, Russia's not doing it. The hardliners in Russia don't want to see Putin back off on some of those things, or presumably, since we're going back to 19th century power politics here, again, you always got to think about what Trump is doing for Trump and for those that are close to him. Trump wants to make deals in Russia. He wants businesses to go into Russia. Good luck. Good luck collecting those dividends, maybe a few quarters before you realize that your assets are seized, because that's how Russia does business. That's how any Westerner, which has gone into Russia into the 90s, knows. I mean, IKEA had a line item for corruption in Russia. This is just how they are. Whether that lasts 3 months or 3 years, I don't know. No one in the hardliners in Russia are not going to stand for it. So I don't think Putin's going to back off the gas. He can't. And it's extremely dangerous for places like where I am, in the former Soviet Union, in the Baltics. We know exactly how they are, exactly how they're going to act. And even though we have all the alliance, the theoretical Article 5 strength of NATO, we have an administration which has shown pretty big weakness there. So this is very dangerous in that it's weak, very weak times for Russia right now, just a cratering economy, high inflation. Talk about not getting eggs in America. They can't even get, potatoes in Russia is very, very bad right now. And even in Moscow and St. Petersburg, the only places where there are economic assets, there's no assets. I mean, yeah, there are oil rigs and things out in the north, in Murmansk or something, or in Siberia, they have some assets, but there's no free economic activity. There's no property rights. It's unbelievable to me that people think that you can just give a pass on everything Russia has done in Ukraine and somehow, we're going to do some deals. This is the delusion that the Trump administration is running into, and this is what's the most scary to me. Thank you, Jeremy. Appreciate it. Started out with Russia and Ukraine at the beginning, then we went back to the economy and tariffs and all the rest. But since we're just going so crazy, Hang Seng looks like it closed down 13%. So Uh, just look at that. Look at the Hong Kong index, 13% down in one day. I'm having trouble decoupling all of the ideas, other than pushing your allies away and bringing your enemies closer, which is what the Trump administration is trying to do. To me, does not seem like a winning formula. First and foremost, because Sun Tzu, they don't even understand their enemy. They do not understand anything about Russia. They don't understand anything about why Russia is corrupt and as terrible as it is in the first place. So that's the big risk. But as I said, most people that have been protesting over the weekend in America, yeah, they're worried about their transfer payments and their Social Security. And most probably support Ukraine. Maybe 90% of the people that are protesting over this last weekend in America support Ukraine. I don't know how many percent even know about Bitcoin in that bunch. This is your only escape valve to me. Of course, you have gold and whatnot, but unless you can predict what's going to happen in the next few Trump, whether Trump's going to make a few deals with some countries, ease off the gas in some tariffs, or if he's going to go harder or stay stubborn and egotistical as he typically does, it's going to be very hard to play those markets. And this is why we're in the good, fortunate or unfortunate, unfortunate in that the headwinds could increase, but Bitcoin has this adoption curve, which is, like I said, from 2016, very, very reliable. Geo says, when he said we'd all be rich, it reminded me of the financial crisis when they got rich and bought all the companies for a few cents precisely. No, dollar cost average in, Geo. Dollar cost average in for BTC. And yeah, I agree. As far as the 2008 crisis, telling you that we have to act this way to save the system wasn't true at all. Wasn't true at all. We zombified the system in 2008. All right, we only had globally, let's look here. This is world GDP now. The US share went up a percentage point, but we went from $64.5 trillion in 2008 to $61 trillion. Doesn't actually seem that bad, but it was bad for many nations that didn't have the ability to print their way out of it. All right. I was in one such nation. The Baltics had to do really hard internal devaluations. And yeah, what most countries did is they printed their way out. And nothing's going to, this is just hilarious. This is the IMF curve. It's not going to look like this. I can guarantee you that. But again, whether it's 1 or 2 years with negative GDP growth, that necessarily doesn't mean anything either. What I need to show, I don't have it ready yet, but we need to go back to the real wages of Americans in particular, because they're the ones that have suffered from offshoring. So those that were in the lower middle class could earn normal real wages until the 70s. And then from the 70s, of course, we went off the gold standard, those real wages have fallen. And it doesn't even matter what inflation rate you use. You could use the gold rate that would look the same, that is flat or down. So I got to get that chart as well. And Trump is actually trying to help those voters, but the medicine is just, it's not complete. Perhaps you saw the interviews with Lutnick over the weekend saying that, think about all those millions of jobs of Chinese screwing in little small screws into iPhones. We're going to bring that back here. And then in the same breath, he says, but it's also going to be done robotically. I mean, they don't even have a plan for what they're actually going to do. Musk has kind of backed off the gas there too. He called for a free trade zone between Europe and the U.S. They have sort of like a constellation of things they could do, but they don't know what they're going to do, and they just whatever Trump. John Bolton. If you guys ever see John Bolton, watch him. All right, he's not a economics guru, but he knows security, and what he said about Trump says it's not 40 chess, it's one move at a time. One move at a time. And when Trump comes into work, he comes into work like he's a real estate guy. He just sort of, you did a couple deals, you made a few phone calls, you raised the rent on someone yesterday. When you come in today, you say, what are we going to do today? As the boss, you didn't really prepare anything. You just say, what is the next step? What's the next step on my bank loan? What's the next step on this development in Chicago or Florida or whatever? What are we going to do today? There's sort of loose ideas of a plan, but there's no plan. That's what it seems to me. No more money, Jeremy says. Yeah. Take confidence in this. Take confidence in this. There's a lot of data here. And 70% of the time, the Bitcoin price will not be below half of the trend, 0.5x. Okay, so let's go out again. Let's do one more time. I got to probably close it out here soon. But if we go out to June, just June, the trend is 100,000. 70% of the time, based on all data, the price just is not below 50,000 in this case, half of the trend line, 53,000. I'm looking at number three. 30th percentile, 0.5x. Okay, so that means 1 minus that number, 70% of the time, price is above this. It's totally possible that we could fall into this, but we've never done that sort of a move in the past, especially a year after the halving, moving into the upswing, which we did in 2017 and 2021. Now it's 2025. Everybody's assuming that. So that's one thing. But then the other way to look at this is, let's take it out to June again. And June, I was just going to say, am I on the wrong year? June 2025. Okay. The other thing to say is, right where the price is right about now, $76,000 Bitcoin, that's a 50th percentile move. It's like completely normal in the distribution. It's right in the middle, 50th percentile. So I would say take comfort in that. Take comfort. This is a statistical number. It's not me drawing a line on a chart on TradingView. This is a statistical number. By June, the current price is a 50th percentile event. Right now, it's a little bit under that, right? Go back to April 7th, something like that, 5th, whatever, 7th. Right now, a 50th percentile move is $72,000 Bitcoin. But you can look at already by June, and this, let's just take it out to the end of this year to give you more comfort. By June, it's 78,000. By December, sorry, not 78. By June, it's, 78,000. By December, a 50th percentile move is 93,000. See what I'm looking at? I'm looking at number 5. So if you trust the trend, and I'm not saying you have to trust the trend, no financial advice, but if you trust this 96 percentile R-squared power regression, which roughly says that every 12.7% increase in the life of Bitcoin, the price will double. That's what the trend is. See my website for more on that. You can basically get something that should be 93,000 in December. That is based on a 50th percentile move, like all the data, just pick the one right in the middle, for $76,000 today. So do those types of calculations in your head. The trend itself, which again is stronger than the percentiles, it's like the mean. It's like the mean basically. 125,000. All right, so if you can get something today at 76,000, where you only have to wait till December for it to be 125,000, looks good. Again, not financial advice. That's how I'm looking at it. Gio, you mean you've been waiting to see how Bitcoin reacts in stressful situations? And yes, I agree as well. I think people should take comfort. Again, I know I'm 2 days off here on this chart. Unfortunately, I'll get my APIs fixed hopefully soon where I can get more accurate data every time, but I got a delayed ticker right now. But anyway, yes, we're right now in between the 50th and 60th percentile, or even lower than that green bar, right now on April 7th. But that's still, you know, compared to this stuff, we're looking really good. And this is another funny thing, right? Like, this is also where I'm fine not trading these types of markets. Is traders are going to make killings on this stuff. This is where they make their money. They love volatility. They love these moves. Traders are making all kinds of money. And if that's your thing, go for it. It's not my thing. I try to keep it macro. For me, I'm looking at these as very negative towards world stability. That's what I'm looking at it as. I know I have to do all these caveats of where I live, but that's what I'm worried about. Geo says markets are below last summer's levels with Japan carry trade. Bitcoin is well above. Interesting point. I don't even know the yen value for a year ago. I could find it, but obviously the Nikkei itself being 20% down, and that is a yen-based index. That's true. Bitcoin is well up, and again, this is where it's adoption for Bitcoin right now. It's not just on the whims of traders, which is great. It's great for Bitcoin. Jeremy says, how do you think this China rare earth mineral export ban will affect global markets? I think it's going to be rough. I heard an interesting thing this morning that Taiwan, which apparently is a state now because Trump put him on their board after the U.S. having strategic ambiguity for 80 years about Taiwan. Taiwan is now apparently a country, according to Trump. They said 0%. They're coming back to the Trump administration saying, we want 0% reciprocal tariffs. And that's an interesting strategy for Trump because now Trump has to respond to that. I mean, he could not, but they're going to Trump and putting like as much candy in his face and Diet Cokes and burgers in his face as you possibly could and saying, what are you going to do? China, of course, mainland China is not doing that. They are going hard on all sorts of things, and Europe will probably do that too. I heard another interesting thing on the BBC this morning. Yes, I listen to the BBC on the radio, taking my daughter to school, but Europe is kind of split in this idea as well. The Italians who love American tourism and don't want that to stop this summer, which is a huge part of their economy. They don't want to anger Americans. But then, of course, you have the Germans and the French who just are saying, yeah, we're going to reciprocate and we're going to try to not trade with you anyway. So there's a split there, too. The EU itself negotiates in one trading bloc. All right, so they're going to have to figure that out themselves before going to the Americans. And that's going to be interesting to see as well. But China's already showing, that they are they're going to go hard and that they're going to take the French and the German approach. But it's interesting that Italy kind of wants to do the Taiwan approach, which is Just keep the carrots out there. Hey, we don't want to do much. And maybe the only people that will suffer are Americans, because their stuff's obviously going to get more expensive, because the people that pay taxes always, in the end, no matter what we're talking about, is the end consumer. So Americans will suffer. But then if the rest of the world can still kind of go about trading on its own normally, sooner or later Trump will imagine that this is a mistake. That's not a bad strategy, actually. Keeping a cool head, it's not a bad strategy. I don't know if they can keep it up, though. Maybe they'll feel like they need to respond. But yeah, the Italy and the Taiwan approach, which is very friendly, versus the France, Germany, Chinese approach, it's going to be interesting to see. I honestly don't know. I don't have a prediction. Trump wants them to grovel to him, that's for sure. And that's what the Taiwanese and the Italians are trying to do. I stopped trading, only stay humble, stack sats. I think it's the way to go. It's the way to go, Gio. This is tough, man. I mean, I never show these. Like, I never show performance indicators on the markets on my streams, because I'm not a trader either. I like doing the math, seeing the long-term things. I mean, yeah, look, markets are going to be up. Let's see, this is a 5-year trend. This is quite interesting. The Hang Seng is actually down on a 5-year chart, and Russia's flat. I expected that for Russia. I did not expect that for China. This could have to do with China, with Hang Seng is Hong Kong, so it could be, I don't have the Shanghai here, but it could be just Chinese competition that is blown out. It probably is that, actually, because the riots in Hong Kong were starting about this time 5 years ago. It's interesting that Hong Kong is down even from 5 years. So a lot of capital has left Hong Kong. It's probably what that is. But all the rest of the markets, yeah, generally up. Over 5 years, you roughly divide. These are not compounded numbers, but if you're looking at the CAC, 50%. That's 10% a year. That's not a real. I'm rounding generously there, but if you're going to do markets, do indices, do indexes, stock indexes, and bond indexes too. And frankly, that's what I say about Bitcoin. But Bitcoin is, again, why is this so much better than any of those markets? It's because this trend is not just 10% a year, which is what we see here, right? This is 50% over 5 years. On the lower bound, that's the CAC, even higher for the Germans and the Americans at 80%. So rather than being 10 to 15% or 12, 13% a year, the slope of this trend line, it's coming down always. The slope of the returns is 45% per year right now. 45% a year, going to 42% by the end of this year, 42%. And if you buy, say, here and sell here, right? You buy at this under, you buy in the 20th or 30th percentile here, well under trend, and then you sell in the 90th percentile, you're going to get way more than the number I just described, which is 45%. Peter Zion said Bitcoin was $17,000 overvalued at $16,000 Bitcoin right here on Joe Rogan. Somewhere here. If you bought then and held till here, you would have well in excess of 45% per year. You'd have, just do the simple math. You'd have 3x in 3 years, 4x in 3 years. You're well over 100% per year, compounded. Huge return. And I don't think, these are obviously juvenile looks at the stock market, but I don't think one can play with limited information and not being a trader and knowing that you have the whole Wall Street world against you in moments like these. Like, this is extremely dangerous to play these markets in this moment. You might think, oh, we got this drop. It's going to go up 20% tomorrow, whatever. Like traders just waiting to, liquidate you in moments like these. I do like to see Russia sideways here. And I hope that continues. But again, they're on a full military footing for their economy. All right, guys. That's going to be it for me for today. The sun is shining. It's cold and crisp here in the Baltics, but my home office is just in a terrible location. It's morning, so you can see that it faces east. And when the sun is shining, it's harder to get a good recording. But anyway, thank you for watching. This is the most important chart anyway. You don't need to see my ugly mug. Anywhere between the 40th, even the 30th, and the 70th percentile is normal. It's just normal for Bitcoin. And that's where we are right now. All right. Have a good week, guys. Talk to you soon.